So let's get more on that with Carol Schleif, Chief Market Strategist at BMO Private Wealth, and she joins us now. It's good to have you. Thanks so much for joining us.
Hey, thanks for having me.
So what do you make of what we're seeing today, particularly in the U.S. markets? It looks like a bit of a sell-off.
Yeah, I think a piece of what we've got going on in the U.S. is we're trying to make that transition, if you will, from the Magnificent Seven leading the parade to a much broader participation. And it's been a bit rocky as that transition happens. And there's also been a lot of volatility in some of the new AI announcements, and investors are trying to figure out how they deal with it. But taking a step back from the intraday or the short-term trading, if you will, we continue to believe that things are teed up. You look at the results coming out of the earnings season, and things are teed up for some pretty strong growth this year. And we suspect, given the adoption of new technologies, that you'll see faster growth with lower inflation than many expect.
Okay,
so far.
So it sounds as though you don't think that this kind of indicates expectations of economic softness, maybe the opposite.
No, we definitely think you've got some transition going on, and markets are trying to absorb that. And actually, when you look at it year to date, you've seen the NASDAQ and the Mag 7 flat to down a little bit, and you've got small and mid cap and other industries up close to double digits. So you're seeing that widening happen. And the AI, we're still spending on data centers. We're still deploying that use cases in a lot of different situations. And there's a lot of technology rollout that continues. And the earnings season that we're wrapping up here in the U.S. with the retailers still to come, but for the most part, 80 or 90% of companies are in, and the bottom line's growing double digits, top line's growing strong single digits, and companies are showing lots of margin enhancement, if you will, and it's broad spread. It's not just AI leading the parade.
Interesting. If we take a look at U.S. trade data, which showed that the deficit remained largely unchanged from a year ago, that data coming out this week, I wonder what that suggests to you. Like, does that show that consumers were kind of front loading when it comes to getting like ahead of tariffs, ahead of imports, or does it show that the tariffs are basically ineffective?
Well, the deficit's down a bit. The tariffs were nowhere near the sort of across the board hit that many feared. There's definitely tariff impact in select spots, but there's also a very strong consumer. Employment stayed very strong through the year. You've got a lot of policy changes that companies and consumers in general are still trying to sort through. So we almost think it's a little too early to put a period or a fine line on all of that. There's still a lot of things that are sorting their way through the system, and it'll take another couple of quarters to see that. But the underlying strength is that the demand is still there. We've seen a lot of green shoots in the last week or two, particularly in manufacturing data. And manufacturing, as you know, has kind of stayed by the side on the sidelines for the most part, trying to see how these policies sort themselves out, because you've got immigration, you've got trade, you've got the tariff issues, and those aren't settled yet either. There's rumblings that some steel and aluminum relief might be in the wings as well.
Yeah, because Donald Trump seems confident that the United States can reduce that trade deficit. You mentioned the green shoots you're seeing in the manufacturing sector. Do you think it's likely that gap can be closed?
Hey, we'll see if the gap can be closed. But I mean, last year we were at a point where we were running more like 7%. We're still waiting on the Supreme Court to decide whether or not those countrywide tariffs are legal. There are other industries as well that they're on. So tariffs are here to stay. They're higher than they were last January, lower than they were threatened in April. And so, tariffs are clearly a policy that's here to stay on that front. But we think businesses are slowly but surely getting more clarity on things. We think growth helps some things, but there are fiscal stimulus parts to the One Big Beautiful Bill that also will impact that. So getting it closed is not on anybody's radar, but hopefully getting it stabilized and narrowed some, because we have seen a big pullback in government expenditures, not the least of which is through several 100,000 government workers being sent into the private sector, if you will, through early retirements and DOGE actions and other things.
Mm-hmm. Yeah, a lot of movement. I want to switch gears and talk about gold for a little bit. Obviously, gold saw strong performance in 2025, a little more volatile this year, but we've seen investors using it as that kind of like safe haven. What should investors be avoiding on the flip side of that, or do you think that they should be using it as a safe haven?
I think the thing with precious metals is they're tough to value like they are. I spend most of my time looking at stocks and bonds, which are easier to value, if you will, on core fundamentals and various things, discounted cash flows and other things like that. Gold, cryptocurrencies are tougher to value because it all depends on where the demand issues are different. We've had lots of central bank buying in the last couple of years as haven assets. So really, if an investor wants to own gold, it has to be, they have to understand why they want to own it and what risks they're trying to hedge. Precious metals in general is that way. And so then they've got to figure out what level they're comfortable paying and tuck it away. As for many investors, gold ends up being that this allows me to sleep at night, because if everything else in the world really blows up, I still know I've got real assets in some form of gold. And in many cases, if you're buying gold bars, you can touch it and feel it. And so it's a different purchase decision than buying stocks or buying bonds is.
Yeah, a good point. Okay, we will have to leave it there. That's all the time we have. Kara Schleif, Chief Market Strategist at BMO Private Wealth. Appreciate your time and your insight. Thank you.